Most traders think their problem is bad entries. They believe they just need better indicators, better signals, or a better strategy that will fix their problem. But the real challenge many traders face has nothing to do with charts and everything to do with the one mistake almost every beginner makes: position size. One oversized trade can undo a lot of good progress. One emotional position can damage confidence and make a trader afraid to act. And most beginners never learn how to control this. Today, you will learn the Chart Whisperer Capital Exposure Rule. This rule protects trading accounts, keeps emotions under control, and allows traders to stay in the market long enough to improve. Because in trading, survival comes before profit. Many beginners choose position size based on confidence. If a chart looks strong, they go big. If they feel uncertain, they go small. That is emotional sizing. Chart whisperers do something very different. We do not decide position size based on how excited we feel about a trade. We decide it based on capital exposure. Capital exposure simply means how much of your account is involved in a trade. The first rule of chart whisperer trading is simple. Never expose too much capital before the chart confirms your idea. This is why chart whisperers rarely enter a trade with a full position. Instead, we begin with a partial position. Think of this like testing the water before jumping into the pool. The first entry allows you to observe how price behaves near important areas of structure. It might be near VWAP. It might be near support or resistance. It might be an area where price previously paused or reversed. When price approaches these areas, the chart begins to tell a story. The candles show behavior. Volume shows participation. Momentum shows whether the move is expanding or slowing. Your first position is not about profit. It is about observation. If the price behavior continues to confirm your idea, you can then slowly increase your position size. If the behavior weakens, your capital exposure remains small during that time. This approach protects your account while the trade develops. Now here's something surprising. Many professional traders worry less about being right than beginners do. The pro's main concern is controlling capital exposure while the chart reveals its direction. This changes the entire mindset of trading. Instead of trying to predict the market, the trader allows the chart to unfold and adjusts exposure as new information appears. Now here's another principle many traders discover the hard way. Position size controls emotion. When a trade is too large, even small price movements can feel stressful. Traders start watching every tick and may react instead of following their plan. But when capital exposure is controlled, the mind stays calm. Calm traders follow structure. Calm traders observe participation. Calm traders watch momentum. And calm traders make better decisions. This is why chart whisperers often use what we call the half position approach. Instead of entering a full trade immediately, we begin with part of the intended position. Only after the chart continues to behave properly do we add more. This creates a simple progression. First comes observation, then confirmation, then expansion. The position grows as the trade proves itself. Chart whisperers follow a simple rule. Start small while the chart reveals its direction. Increase your position only after the chart confirms the move. Most beginners do the opposite. They enter the entire position immediately and then hope the chart behaves the way they expected. When the chart moves against them, their capital exposure is already too large. That is where panic sets in. Chart whisperers avoid this problem by controlling exposure first. Remember this simple framework. First, control your capital exposure. Second, observe price behavior around structure. Third, allow the trade to expand only if participation and momentum continue to support the move. When you trade this way, something powerful happens. Losses become smaller, emotions become quieter, decision-making becomes clearer. You stop chasing trades and start managing them. Many traders spend years searching for better indicators. Chart whisperers focus on something much more important: capital protection, because the trader who protects their capital earns the right to stay in the market, and the trader who stays in the market long enough can improve their skill. On this channel, we teach trading built on structure, discipline, and capital protection. If you want trading based on observation instead of guessing, subscribe and join the Chart Whisperer journey. In the next lesson, I will show you how traders use VWAP structure and volume participation to decide when a position should grow and when it should stay small. We'll see you there.